Welcome to part 2. In this class, we're going to discuss identifying market structure. So let's go to a random pair. Let's say USD CAD. All right. Hopefully I don't have anything drawn up here. And you know what? I'll just hide. Can I hide my indicators? Yes, I can. Hide drawings. Wonderful. Okay, we are going to shrink down the MACD as well and just leave this up. Okay. So, identifying market structure. What does that mean? Well, simply put, it means seeing where the market has hit previously, the highs, the lows, any sort of consolidation, any trends that it has, to be able to identify any next potential moves. All right? So, the most important thing when you analyze is you look from top to bottom. Now, I zoomed all the way out. You can see on the 4-hour time frame, this doesn't give me much information. Like, this is so tiny, I'm not going to be able to pick anything out, okay? So we start month out. And as you can see, not a whole lot of information now, is there, right? It just looks like a giant cup and handle, and now it's just going sideways for 8 years, sure. Now, what you do at this point in time when you have the entire pair in front of you like this. And again, it all depends on which broker you use. Some of them could go further back because again, Forex has been able to be traded, I believe, since the 70s. It's just there's certain programs and certain brokers that haven't existed that far back, right? So this is why this one's limited to May of 2002. There could be other brokers that go even further back. Just for an example, let's pop one from FXCM, see how that one differs, right at the bottom. If we do the monthly, right, you can see it goes all the way back to 1971. Okay, so it really just depends on which broker that you have. FXCM seems to be, has much more data to give. I just like using Oanda because it's convenient. That's really the only reason, right? So EuroCAD, let's pop back on that. All right, so EuroCAD. When we see the entire span of the last 20 or so years, it doesn't really, or sorry, we were on USD CAD, weren't we? My mistake. Pardon me. There we go. Because I'm like, that's not a cup and handle. All right, so what we do at this point, we want to see and kind of identify where the highs and lows are, right? So I took the liberty, and again, you can watch on the how-to videos how to set up your hotbar. I'm not going to go over that right now. I'm just going to let you know what I use. So horizontal line, we see that the highest that it's ever been was here. All right, those are my previous drawings, right? So I'll delete that for now. Another area is right here. It looks like we peaked here twice, right? Very close the second time. So that's another zone. A third one where we have multiple peaks is about here. And as you can see, it's pretty relative because we have a lot of candles kind of bouncing off or just slightly closing below and above that area. Okay? And then once more all the way to the low. And where else could we possibly put it? Yeah, right here. We can do that because these candles opened and closed around that line, and then we had some more play here. Okay? And now, so this is kind of the overall market structure. Okay? This is the biggest top-down you can expect. Okay? But now what we can do, we can start dissecting a little bit more where we see tips of wicks or candle bodies that kind of close in the same area. Okay? And what I do with that one, I'll click on the same thing, but I'll change the color, right? So now you can see I'm going to draw it right where the candles actually close, not with the wick, because look how that wick just bounces off that, where the close and open happened, and now where the close and open happened, right? So the color, let's make it, I don't know, let's go white. That'll be nice and visible. Okay. Any other significant parts that we can see? This is the best time to be able to pick and choose exactly the spots that it bounces to and from. See, look at this one even. open and close, open and close. So anytime that there's multiple candles over larger time frames that bounce around the same area, it becomes pretty significant. Okay, let's see here. See, broke through, then it closed right there, open and dropped, and now look at this, close and open. So that was a pretty significant zone too, right? And as we can see here, it was being tested a few times, it broke through it, came back up, didn't pass the other one, and started dropping lower. Okay, is there any more that we can do? Well, let's see. Right here, is that going to be of any significance? Not as much. Here possibly, maybe there. This is a better one. See, so look at this. Lots of candles going into that zone in the past. Now, if you don't think that's very relative, look at the time frame, okay? June 2007, and this was in play June 2014. 7 years later, it's still a viable option to use as a support or resistance line. Right? So look, it broke through it, it tested it again 6 months later, because these are a month, and then it bounced all the way up. Okay? Pretty neat. So that's, in the grand scheme of things, this is where we set up our market structure. Okay? We have it on the month. So now we can dive in on the week and see what's been happening over the last several years. We don't need the entire outlook for the duration of it all. This is what we see. Okay? So now you get a better idea of candle patterns where they're bouncing from, so we get secondary lines. Look at this, right? Draw it right there. Look at how significant that becomes. There's lots of opens and closes within that. Right here, right here. So in the weekly, let's just draw them red, okay? So there we go. And as significant as that is, wonderful. Okay, and then you see those wicks actually become candles for the weeks. Okay, so where else is it going to be pretty viable? Let's see. That one, not so much. That one, not so much. This line, right? You can really kind of discern where these lines need to be drawn afterwards, where some previous support and resistances are. Look at this one, for example, right? Candles right there, wicks right there, closing and opens very close. And then right here, how it was tested in the past, right? How significant is that way back in 2004? Oh, look, right? Close and opened right on those lines, right in between them for several weeks. Bounced up, kind of retested that for a week, and then you could see how it was used in between those lines, right? So even though you see it now, you know, I could just draw this up 10, 15 years ago, and you would see how valid these lines become. Okay, so now you can pop into the daily and analyze the structure from there, but this is what I like to pop in after I set up my overall structure. Okay, I use this fib channel, and there's a specific way that you do it. Like you can grab from low to low, and then you grab the highest point in between those two, right? But you're going to notice that these lines are very, very far spread apart. Like they're going to be hundreds, almost a couple, maybe 1,000 or so pips apart. We don't really want that. So what I actually do, I cheat a little bit on my fib lines. I'll still go over the two lowest points here, but instead of drawing all the way this to the 1, I'll use that as the 2 instead. So you can see I'm going to get the 2 to peak off that area. Right, so it's sitting right there. Okay, so it's just double my original move. Okay, but now as I do that, you can see a little bit more detail, and on top of the horizontal lines that I drew, right, it kind of gives you a good example of Fibonacci levels that kind of go diagonally, right? Because not everything moves in a fluid manner. It doesn't always box out and go straight, right? There's going to be a lot of diagonal play in your charts. I don't know if that made any sense, but I hope it came across like it did. All right, but now you can see, even in between those drawings that we had before, look at within these diagonal lines how it even plays off, right? You could see the weeks that are the months that open and close right on the line, breaking through that, right? Going back up, testing it again, breaking through it, and you can see how they sit in between those lines nicely. Okay, there's going to be a lot of information that you can gather from that. So look where we drew up that aqua. Okay, watch this purple line. You see it closed and another candle opened further down here. Look how this becomes significant just based on that pass, right? Closed above it and then closed right on the line. Opened on the line, broke through it again, and then wicked off it, but didn't close on it. Wicked off it again, didn't close on it. Then finally it broke through, right? Tested it again, wanted to go higher, broke through again, wick tested it, closed lower. This dropped almost to the aqua again, right? It becomes extremely significant with these lines. And these are all month candles, right? So you can see how valid it all is. Whoops. Okay, well that's wonderful. Oil alert. Anyway, so as we keep going, you can see how valid this purple line actually is, right? Everything is being tested off that line, right? And like I said, if it tests once, tests twice, what's the likelihood it's going to test the third time, right? So how about we just do this? Pop a replay right here, switch it to the weekly time frame. It's going to be a little slow because I have a lot of drawings up, pardon that. Okay, look what happened in those couple of weeks, right? All of this movement. Okay, look, horizontal line that we drew, now it's bouncing off that purple as well. What are the chances when we are able to catch that move, right? So let's see, if it bounced off that purple the one time, right, we switch to the daily now and try to be able to zone in on that potential trade, right? So this is what I can tell you was the trigger point. And this is a lot of volume that happened over the course of the several days. Point of control is right here. So you can see they didn't close below that line. The wicks definitely went down, but it did not close. Okay, what I like to draw up on a lower time frame now. So now we see where we're at. What I'm going to do is take the candle and move it here. Okay. And what I'm going to do now is drop the time frame once again to the 4 hour. And within that 4 hour, this is the information I get. So you can see the consolidation that happened there. You can see the consolidation that happened here on the bottom. So we can draw another volume right across there to give us the exact point of it all. Right? So we'll draw another red line. Boom. Right? Look at this imbalance that we had. So what I like to do with the imbalances is draw a Gann box from top to bottom where that actual imbalance is happening. So you can see the previous red candle to where it is in the green and the next red candle. So wherever there's wicks or candles, that's I don't consider that part of the gap. Only where it's just pure solid color with no wicks on either side. Right? So what I'm going to do is draw a ray on here as well, just in the center. Okay, and I'll just make sure that's a different color, so let's go orange. All right. So there's our information. Those are the major lines that we have. Now that's on the 4 hour. So now let's see the 1 hour. Look at this, right? So 2 hour would be perfect. This would align very nicely. Okay, what information does it give us over here? Right, on the climb, it doesn't give us a whole lot. Right, on the consolidation, doesn't give us a whole lot. There's no real points of the candles to be able to bounce off. It's just the volume that was drawn right here, and you can see how at the end these bounce right off it, right, like I was saying before. So now let's pop on the daily. Okay, and where we drew everything up. Now let's get rid of the replay and see how significant the analysis becomes, okay? Where are we at? 2022, that's not what we were looking at, where are we? Right here. Where were we at before, geez? The purple, right on the purple line here, okay. Right, we went a little too far. So we'll come right back to that. Just making sure I'm gonna pop on the weekly so I have the right spot. And yes, that's exactly where we were looking at, right? What caused all these movements here based on that? So let's move forward. All right. So we had all that information. Like I said, it bounced off the one time, what's the chance it's going to go again, right? So what we want to do is find out how that actually played off here, because that's a significant move. Okay, like we saw here, it bounced off the purple, it went all the way up there. What's the chance it's going to come down here? Look, it played out like this. Okay, now we'll switch the times. So remember, the red is the volume and the orange is the imbalance. Okay, look how close it came to the bottom volume right there. It kind of, let's draw this, 11 pips. That's pretty damn close, right? 11 pips. Overall, from that is 51 pips from that volume line, right? My typical stop losses, like you have been watching, if you've watched any of the chart videos, 60 pips is kind of the comfort zone. If I have to go more than that, I don't take the trade. Less than that is ideal, but 60 is kind of the threshold. So like you can see here, if I would have taken a trade off of that volume line, right, and I set it at 60 pips, looking pretty good. Okay, and now let's see how it kind of moved. All right, now the best way to be able to tell how far up it's going to be going when you have everything else drawn, look at this last peak right here, all the way to the bottom, right, where we tried to snag it. 618 is typically a good reversal spot, right? So if I would set TP around that area, all right, take profit. Let's say we took a trade there, and right to the bottom, 60 pips, right? It's what I said, so 59, let's say it's that. I would probably go to that yellow line. So that already is a 6.6 to 1 risk to reward ratio, if that triggers, right? But as you can see on the daily, if I'm bouncing off that same area multiple days, I'd probably close the trade, right? And I would close it at a win right there, which would be 355 pips, 5.7 to 1 ratio. Pretty good. Let's see how the rest of the days played out, because I can't remember honestly what I erased. But you see that? Remember that imbalance that I talked about? Look how valid it becomes afterwards. Not necessarily happening here, but previously all the way back there, look how it's resisting off that area. Okay? Not to say it's going to go all the way back up. All I'm saying is if this happened for 5 days, like you can see the wicks almost the exact same spot, I would shut it down. That's my personal preference. Okay, so maybe TP wasn't hit exactly, but you know what? We got out of there with a lot of pips, right? So let's see how that moved, right? Did it go all the way down? Did it consolidate again? Oh, there it goes. And that's back down to the area, so that would have been a break even because it didn't quite hit TP, right? Like I was saying, it didn't come all the way there. But if you see that pattern, right, for a few days it's just hitting off the same wall, so to speak, or ceiling, get out of the trade. And now look, we didn't even have EMAs. We didn't have any other indicators. There's no indicators on this chart right now. This is purely analysis, right? This is just a few tools, and I want to show you guys exactly how valid this becomes, because you can use all the free programs because all the tools are available to use, right? When you start paying for them, you're basically paying for indicators. All these wonderful ones that I set up on my favorite list, I don't even use them all. I use 3, right? I know I have 8 set up here, but as you can see, the majority are hidden. My favorite one is the Fibonacci EMA, and I like using the RBIPP, which is Rob Booker pivot points, right? Intraday pivot points, that's what it stands for. So this is much more important because the indicators help with your analysis, but they shouldn't be your analysis. This is kind of the bread and butter that you're looking to achieve. All right? So we drew, you can see we went all the way from the month, right? We drew up all the black lines, the white lines, red lines, whatever. And then I also drew up my Fibonacci channel, went down to the week, drew the couple of red lines there when we saw, within the month there was other information we could grab, right? Down to the daily, what's happening on the daily candles, right? And you could really pick any spot. It didn't have to be that one, right? So just an example, I'll delete everything right now. Actually, no, that's a bad idea, sorry, because then my fib channel and all my horizontal lines are gone, right? So I'll just get rid of this one, and these guys, right? We don't need the rays, we're going off somewhere else. Okay, perfect. All right, so now let's pick another random point in time. Let's go here, right? Boom. Candles all the way to August 2021. All right, lots more stuff happened. We already did a weekly, right, based on the entire chart. So now look what happened here. We drew up all the volume. This is where it bounced off the first time, right, where it went up and down. Was it? Or was it somewhere else? No, it was there. Just making sure, right? We switched down to the daily. So I'm going to move forward just a little more. Let's see what we can see. Okay, so we'll stop it right there. I don't remember exactly where it goes. I think, like I said, cup and handle, but this is in 2021, so that's already long gone. But anyway, so this is kind of what we see, you know, last year, significantly, like over a year ago. Let's go a little deeper, okay? All right. Okay, so let's say this was June 4th, right? And that's the weekend, that's the last day, perfect, right? So we would analyze on the weekend all the moves and where they potentially are going. So let's see the significance off here. You see the consolidation, okay? So where does that go? Look, we had a wick off that area, but you can see that it broke that area already, right? So what is the next significant spot that it can possibly go to? And that would be the yellow. That would be right here, support and resistance. So it's a good possibility that it's going to reject off that based off what happened here before. Okay, but how do we analyze for that, right? So we drop back down to the daily, and there's several ways that you can get a good projection on your charts, right? One of them is if everything lines up nicely, the trend-based fib extension. So we can go from the high here down to one of the lows. It didn't retrace deep enough, so this isn't really going to give us fantastic data, but as an example here, and then a final spike up and move it sideways, right? So as you can see in the long term, the potential for it to drop here, it's pretty good, right? And as you can see, we already drew another horizontal white line, and if it crosses that yellow, that's like the perfect spot to take an entry, right? So there's nothing that I can see right now that's drawing it to that spot except for a few years in the past. So ideally, when it kind of bounced off here and went back to the aqua and you saw how it played around here, that would be a good sign that it's possible to take an entry to the upside. So now that that's all done, right, I don't want to pretend like, you know, I knew it was coming because we all watched the replay at the same time. Okay, let's analyze where it is right now. So this is what I can see. Okay, if I draw a horizontal line here, right, look how significant this becomes, right? It broke through here, lots of wicks off it, wick but never closed, wick but never closed, never actually hit that line, right? So what this is going to tell me is I want to switch down to a lower time frame and be able to see more information in regards to those wicks. Okay, so let's zoom in, right? So what I see here, what happened in this one, this was a very large imbalance candle that was formed. Okay, and again, if we're watching this on an actual, what do I want to say, when it's going, right, it becomes much more crucial to be able to snag it at the right spot. But anyway, so imbalance happened, right? I typically, like I said, if it's the wick to wick areas, right, from the previous one, so that's a pretty good sign. Right, it filled the imbalance completely. So that shows that imbalance is closed just based on that move. Okay, my only concern is if I take a trade here and I set it to the top of the imbalance, I'm going to lose that trade, right? Because you can see it'll just trigger the stop loss. So the best way that I like to measure these ones for an entry is wick to wick of that one particular candle, right? So you can see my entry would be right at the 50%. If you've watched any of the chart reviews, is exactly where I would go, right? And just a few pips above that that imbalance that it has. So 45 pips is reasonable for this one. All right, and that would be a good entry. Now, as far as knowing how far down it would go, right? That would be based off of a daily time frame. And again, what we saw here, it was going up, so I wouldn't be thinking that it's going to be dropping as hard as that, right? I would take it to the previous low, and if you draw up Fibonacci's, this is a great time to practice them, right? So for example, these were the last peaks before the drop, so I take a fib, draw it from here to the bottom, boom, look where it hits right off the 618 twice. So overall, this looks like it's dropping because now it hit a retracement area. You know, so best case scenario, it'll go all the way down there. But again, this is the daily time frame. What's the chances it's going to hit that entire zone? I don't know. Probably not very good. Okay. Otherwise, you know, let's see if we want to stay in this trade for 6 months only to hit break even, right? Not something we'd be looking for. So from that point, I would see, hey, you know what? We've been rejecting off the aqua before. This is a pretty normal fib area to pull back to, right? This is the 328. So maybe it might consolidate in that area. So I'm not going to get greedy. I'm just going to set a TP there. Boom, hit, right? May not be exactly as you analyze, but I'll be honest. You know, you can take it even further down, right? But like I said, when you see a lot of that consolidation happen and start slowly climbing, maybe think of exiting your trade, right? Because otherwise you could lose it all, right? You could have went from 515 pips and, you know, finally exited at, what would that be? Let's just use that measuring tool, 280, right? So you lost almost double of what you could have gained just because of greed. Set yourself a reasonable goal, okay, with the trades that you want to take. And this is one thing that you got to be cognizant of, these pullbacks, right? Look, we're on the 4 hour, well, excuse me, we're on the 4 hour time frame. Watch this. From the point to the bottom, right? Even on smaller time frames, Fibonacci's become very useful. Okay, the only one, like this would have sucked a little bit, right? If we draw it all the way from the top to the bottom here, you can see here, oh, it came extremely close, 618. But it didn't really want to go much lower. Okay, it didn't pull back. It didn't go forward that much, but this pulled back hard, went to the 886. So that tells me when we draw kind of fibs within fibs, right, in smaller time frames, if it pulls back that deep, the next move, it could be significant enough to break that zero line, but it will not be carrying as far down as you think, right? The deeper the retracement that happens, the less likely this trend is going to continue. Okay, that's what I want you to be cognizant of. If, let's say, it just keeps bouncing off the 328 and the 50% and keeps going, very good chance that this trade is going to continue for much, much longer. All right. Yeah, and the deeper it goes, like if it passes the 786 and it's kind of within this orange zone here, less the chances of it breaking through the zero barrier and going lower are slimmer. It can still happen, but a lot less than between the 50% and the 618. Right? If it's at the 30% and bounces off and keeps going, that's a very strong trend. Okay? So there's that, and you can see that it pulled up here, but not quite to the top. But look, another potential entry if you miss this one. Look, right here, right at the same point, right? What can we analyze from this wick? Because look, this wick was the significant factor. Okay, so let's drop down to the 1 hour. Let's see what's in that wick. Would be right here. Okay, so as you can see, within that hour, we're going to have to drop it to half an hour. So this is what we're going to be analyzing here. Okay, 30 minutes. Even significant wick there, 15 minutes. See, still the wick, 5 minutes. Oh, data point unavailable, so we're too far back. Okay, so I think I lost exactly where I needed to be on, but you get the idea, right? That was, I think I deleted everything, so I'm going to lose my spot, but anyway. Let's switch that to the daily. Where were we at? Okay, good. So we didn't really lose that much. Okay, we were right. Where were we at? Here, right here, these two pins. Okay, I remember now. Very good. So we'll pop the replay back in that area, right? Because we saw it bouncing off that area again. So, you know, overall, it wasn't a very deep move, but it was a very quick move, right? That happened within 2 days. So again, let's analyze that wick quickly. I think 15-minute was the lowest that we were able to go. Okay, so here it is. Okay, extremely significant. So what I see from this one, I can't get the data in this wick, right? Because it's already too far gone. So what I'm going to do in this case, I'm going to draw a GAN box in the entire range, like from the bottom of the green to the top right here, because that would be all green. Okay, as you can see, it's just on that line. So I'm going to draw a ray right there for our institutional entry. Okay, and then I'll just delete that box. We'll make the ray, I don't know, pink, sure, hot pink. That's not really that visible. Okay, so let's go green. That should be all right. Okay. So where were we at before? We'll just press play on the 4-hour. Okay, so what I'm going to be looking for, and again, if I miss the first entry there, I'm like, there's a potential it's going to pull back once more. I'll be looking to take a short position right in the center of that. Stop loss is just above the previous wick, so 24 pips. And we can see right now it didn't go that deep. It rejected, so it seems to be that maybe the deepest that this will go is possibly this line, right? But still, look, 24 pip stop loss, 7.6 risk to reward ratio, okay? So let's draw it all the way across, and let's see what happens when this plays out, okay? All right, so that was the previous gain that it went up. And unfortunately, it was all completely missed. Yes, yes, yes. Okay. So our entry will have to slide down a little bit. Okay. Now it's starting to climb. All right. We set up that entry. We're getting there. We're getting close. We're getting close. Right? I mean, it took a while to get there, but all I'm saying is, if you're looking at this in November and this is all the way out in December, at least you know that this trade is coming, right? Like if you watched one of the videos I did within August, I was waiting on Euro USD, right? I'll just show you quickly right here what it looked like. I was waiting on Euro USD to get out of this consolidation and right off my imbalance there. Okay, so watch this. So my imbalance, like I said, wick to wick, right? That would be a good entry. See the problem? my 50% was slightly missed just by that. Like I said, I lost that trade because I never entered it. And, you know, it's kind of a bummer to lose that much, but at the same time, it's good to know how valid this analysis became. Look, the Fibonacci line, it touched it. It didn't go above it. It just touched it and dropped. And there was 2 opportunities to get into that, right? But hence, I had my alert set at entry. I didn't have the alert set 4 or 5 pips below it, right? So anyway, let's pop back to USD CAD, where we're at. Okay. Where's my drawing? What happened? Were we not just on this one? Oh shoot, okay. Because I switched the thing so the replay moved. Alright, so here we go. Anyway, so as you can see, right, here became the problem. It did play off this area, but you see it went significantly higher. So if the stop loss was at 90 pips, sure. But 90 pips isn't something I would go that deep with. Alright, so this becomes a good lesson at this point. Because even though that this would have been a very nice entry, right, you could see it only came up to this golden line right at the 618 before it dropped further. So for to be able to grab all the info out of that candle, unfortunately, right, like I was saying, I couldn't get in there. So, it wouldn't have been a very good place to grab that entry. But this is the lesson that we learned, right? It came close. It came close the first time, and then it dropped. After this drop, I would have deleted this trade idea, right? If I missed it by that much, right? And how much was that much from point to entry? 18 pips. If I missed it by 18 pips and it dropped and then starts sharply pulling up, very unlikely this trade idea is going to pan out again, okay? Then, as you see, it kind of broke through higher and then it started dropping lower. And then, lots of consolidation. But check this out, okay? So we'll draw the volume range profile all the way there. Look where the point of control is right there. Right, we're going to turn that back to red. And we're going to delete this green one. We don't need the green one anymore. Okay? So we used all that information. Look, it drops. It pulls up to the red. It plays around there for a little while. And then it bounces off. Right? So this becomes a lot of great information to be able to ascertain as well. Watch, GAN box off of this candle, right at the 50%. Right? That was our institutional play. It didn't hit the 50. It pulled back twice. Right? So here's the thing. Off the volume, lots of different indicators that you can use, and it becomes extremely beneficial. Okay? And yeah, you wouldn't even have to look at that institutional. All it would be is just a pop-up, and typically once it breaks through, it always does a retest first, right? So let's see if we take a long position right at that bar, how deep do we want to have it, right? If it's coming, if this happened, I would take my stop loss just again to the tip of those, so you can see 58 pips, so it'd be 60. And then where could we possibly take it? The golden line seems pretty reasonable, so I would have made TP around there, 3.8 to 1 ratio, and that hit within a couple of days. Right? So not too bad. And then, yes, if it's sharply going up, I'd probably let it ride a little bit more. But as soon as it starts pulling back, I would be hesitant to stay in this trade longer. Right? There's no sense in being greedy for 10 or 20 pips. We would have made 300 or maybe even 280, 260. Right? Even if it's at 220, it's still very good, right? 3.8. So I know this one is very long-winded, but market structure is an incredibly important thing to learn, and it's going to take some time before you guys master it, okay? Before you're able to see specific patterns pop up and what to look for, right? There's going to be lessons down the road explaining what institutional candles are, what imbalances are. At this point in time, I'm just showing you how to quickly analyze market structure and how important it becomes, okay? So, yeah, I hope that this video has been useful, and again, I apologize that it's so long-winded. There's a lot of examples that I want to get through, and hopefully it all made sense. So, if there's anything that you think could be taken away from this that was a positive, or maybe you didn't quite understand, throw it up in the comments. I'll take a look at it, and in the future I may edit these videos to make sure that, two things, that they're shorter and they're more concise. Alright, so I hope it's been helpful, guys, and I'll see you in the next lesson.